How's it going, guys? It's your boys, the RE Avengers, and we're here to lay some hate on an interesting topic I got from an Instagram follower. I think Dion's probably going to blow a gasket on this one. It's one of his preferred topics. So the Instagram follower, his name's Kyle Dorn. He watches my channel. He also watches you guys, and he sends me a message. He says, "Hey, Mike, I got another question for you. My CPA told me that if I want to continue buying rental properties, I need to set up an S corporation because I can only write off a max of $25,000 a year. So I just got an LLC formed and filed to be taxed as an S corp. Now I need to do payroll, but I have no idea how to do this or anything. How do you do it?" And I sat there, I read that. I was actually driving around with Dion yesterday, filming some content for his channel. And I read that to Dion, who almost crashed the truck. It was real risky. So we'll let him get started before he just blows his gasket over there. Dion, what do you think about this?
So there are very specific situations where a person needs an LLC or an S corp makes sense, or a C corp can make sense. There's all kinds of tax strategies out there. I don't know this person's situation. It sounds like they own a few rentals and they want to own more. And then absolutely uneducated response from a CPA makes this person think I need to put barriers in place that will make it harder for me to buy more rental properties. That's the problem.
Mm-hmm.
If this person is in a situation where an S corp will help, sure, we need to get more information from this person, but you can write off $25,000 of real estate losses against your wages as long as you make less than a certain amount of money, whether you have an S corp or not. The S corp doesn't change that situation. Right. Against your earned income, that has a cap either way. If you want to invest and write off against more of that, you have to qualify as a real estate professional. That changes what your write-offs can be. I would like to have a conversation with this person and find out more about the situation. And then say, just like if you were talking to any contractor, lender, agent, or dating, get a few opinions. Talk to more people than the one that's telling you something that would really make your life hard, unless it's needed.
Yeah, so I advised him. I was like, "Look, man, hey, I don't know if your tax preparer, your CPA, there's one of two things going on here. At best, he's mistaken or wrong, like, or at worst, he's intentionally misleading you because he gets to charge you more with the additional paperwork filed if you're an S corporation or have an LLC. But I figured we should probably slide over to Matt, who actually has an LLC, and there were some benefits to owning your own company and filing that way. So, Matt, can you explain to us what you've done?"
Yeah. So what we did was we had to open up an LLC in order to get health care for when I retire. And so we had to have specific health care that would allow us to see our daughter's specialists. And so in order to see those my daughter's specialists, we had to have basically a real full-blown PPO healthcare plan. In order to get that, you have to have a business and you have to hit all sorts of other requirements. Like 75% of people have to be opting into care. The people in the LLC can't be related to you. There's a bunch of rules around it. So anytime you're looking at any of that stuff, I always have an expert, an attorney, an expert on LLCs, and then also a healthcare broker that was an expert on that piece. So they would know exactly what was required. And then my EA, enrolled agent, and then also a CPA. So that way everyone's on the same page with what exactly we're doing it and why we're doing it the way that we're doing it. And so the way that we set that up was just so we could get healthcare for my family. We would have access to the doctors that we need to have access for my daughter. And basically, essentially how it's basically set up is everything that we still own is still owned within the trust. And then the LLC will send the trust a bill saying, this is what you owe us for services for the previous, let's say, 30-day period. And so then the trust will then basically pay the bill for the LLC. But whereas the LLC doesn't actually make any money, the LLC will only essentially cover its costs. And so then there's more to that structure. But as I said, this was not gone into lightly. This was the path that we had to go down in order to get the healthcare that we needed for my daughter. And most importantly is we had an attorney that we'd known for 15 years that helped us set up our trust involved. We had not just a CPA, but an EA, an enrolled agent. So they both knew both sides of it to make sure that we were covering any aspects there. And then lastly was actually having a healthcare broker involved. So he could say, hey, that's fine. We can do it this way because this is what the healthcare insurance company requires. So with any of this stuff, the biggest mistakes that people make are, to Dion's point, not getting multiple opinions, number one. Number two, not actually having a CPA or an EA that actually owns property. The number of landlords that work with CPAs and EAs that don't own property, I've got news for you. If there's one part of the code that gets updated basically every single year, it's around income, around passive income and properties and everything else. So do yourself a favor and get somebody that actually is going to really care about it, not just because they care about their clients, but because they care about themselves. Go next to the selfish motivation, get a CPA or an EA that actually has property. And then the third thing that you need to do is you need to be able to really understand it. So if you can't explain it in under a minute, then you don't understand it. And so you must be able to articulate exactly what that is.
How many years did you invest, Matt, before forming an LLC?
21. And to be very clear, the only reason we got the LLC was for the healthcare. That was it. We've been running with a trust. We have all of our properties in a trust. We bought a bunch of properties that we didn't buy in the trust, and then we transferred them into the trust. It doesn't create a due on sale notice. It doesn't create an interest rate hike. It doesn't create a refinance opportunity. It doesn't do any of those things for us. So the only reason we did it was because we had to have healthcare for my daughter, period, end of story. It was not for any level of asset protection. It was not meant to do anything other than get healthcare for my daughter and create another thing that's a pain in my ass.
And so for those 20 plus years, you've worked with tax professionals
Yes.
and attorneys.
Yes.
Mike, you've been investing since, I think, 2018, working with a tax pro. I've worked with a tax pro for over a decade. No reason to have an LLC because we don't have partners.
Right.
We're not using hard money that requires an LLC. There are no tax benefits. So if there's a CPA out there saying there are tax benefits by having an LLC and you just own rentals, I'd get more opinions.
Yeah.
If you're running a business outside of rentals where you have wages and you pay Social Security and you pay into all of those kind of things like Medicare, which is what you do if you create an S Corp and you're like, okay, I have to give myself a salary so that I'm taxed on less money. Well, now you're taxed on that money as earned income with several other categories of tax that hit it now. You've reduced the amount of money that you can benefit from depreciation, which is one of the main reasons why investing in real estate is amazing. Yeah. So, right, fall back on that person should get more opinions.
Right. So let's say when would you actually need that S corporation? What are some of the benefits? I have a list right here. And really, it kind of sounds like you maybe would file the LLC or the S corporation if you started to, as DJ Khaled says, suffer from success. You get so big that you're starting to hire on employees instead of just contracting out your plumber and contracting out to your handyman. You use them so much that you actually take them on as a full-time employee, and now you need to pay them wages. That's an opportunity where maybe filing an S corporation might be beneficial to you because now you can do payroll tax and things like that. So let me read the list off of Google. It says S Corp tax savings calculator can lower the owner's salary. It can allow you to employ your children, cover owner's health insurance premiums, deduct through home office expenditures, rent out your home to the S corporation, and then implement a plan to reimburse travel and cell phone expenses. So there are some benefits there if you were using all of those things for the business 100%. And there may be, if you consulted with a CPA and some attorneys, it might be in your best interest. But something that's interesting that Dion said earlier, when you have rental income or passive income that's being generated from rental properties like I do, and I've bought all of my properties in just my name, all of the checks, well, I guess the money gets put to my property manager who then sends it to me in a 1099, but all of that money comes to me. I've interviewed my CPA, who's a real estate guy. He's spoken at a lot of local Bigger Pockets meetups in Texas before because he's a real estate CPA focused dude. I did a whole interview with him, and he said explicitly over and over again, you don't need an LLC. The only thing that having an LLC does for you is create more problems for me, the CPA, because I have to file additional paperwork, which means I have to charge you more. And he said, now, that's the tax aspect of it. Some people believe that having an LLC can limit their liability, and so that's why they go that route. We can have that conversation. Dion's beaten that dead horse many times. But from his perspective as a tax guy, you get no benefits whether you have an LLC or you don't have an LLC. You're eligible for all the same write-offs. And in my personal experience, I make about 120 grand from my regular salary, but I have so many leftover write-offs from my real estate that they get to apply that to my regular salary and take my regular salary from 120 all the way down to 80 because of those additional write-offs. Now, again, that's only if you make under a certain dollar amount. I believe it's 150,000 a year that you can do that. But that's why it's important to consult with a CPA who knows real estate. Guys, any final thoughts?
Dion?
Yeah, the one final thought is you read a list there that I'm sure if somebody just Googled benefits of an S Corp, there's the problem with implied inferred.
Yes.
That list implies that an S Corp gets benefits like you could write off a home office and your cell phone bill. So people will infer, I can't if I don't have an S Corp, which is a load of crap.
Right.
Because none of us with LLCs or S Corps before you needed it for benefits, Matt, I write off my home office.
Sure.
The miles on my vehicle. The vehicle. Don't need an LLC to have that benefit. My cell phone. And your CPA will go, well, how much of it is used for business and how much is used for personal? So we'll take 80% of your cell phone and we'll say that's your deductible amount, whether you have an entity or not.
Yeah. 100%.
Agreed. Matt, anything?
I think that pretty much encapsulates it. Again, I wouldn't have an LLC if I didn't need the healthcare. It's just that simple. So for me, it's a really easy thing to explain to people. And I'm really not looking forward to having to run payroll. I'm really not looking forward to doing any of those things. I found a way that before I retired that I already got my next job, and it sucks, but it's just the way it goes. It's the cost of doing business. So the way it is.
Again, suffering from success.
Yeah.
Fellas, I appreciate you being here. Thanks so much, Kyle. I really appreciate the question. I know it's tax season right now, so people are getting some interesting advice out there. Talk to more people, do your research, and we'll see you guys next time.